Hey, good morning. Morning, Goose. Morning, Arturo. Morning, everybody. So, House passes the bill. Got a debt ceiling deal, and the House passed it. But what comes next? On to the Senate. Need like 60 votes to get it through the Senate. Probably going to get it. Probably going to do it. I mean, why would you buck the White House? And then, there's probably enough Republicans out there that don't want to be finger pointed if they burn this sucker down. But they pass it this, immediately, like I've been talking about for days. Immediately, it creates a situation where the Treasury has to refill their coffers. And it's funny, this narrative has started showing up in mainstream media. That if they're watching this right here, just give me credit for it, you want to help support me getting bigger, just give me a little credit and I'll grow a little bit and everybody can be happy. Just kidding. If you want to chat with me during the live stream, all you have to do is be a subscriber. Just hit the subscribe button. You can chat right there. Morning Al, morning Jan. And while you're at it, you might as well hit the alerts button, the little bell with the doodads, and hit all notifications so you get notified when I go live every single day. And that's, of course, if YouTube thinks you're going to watch it. If YouTube doesn't think you're going to watch it, you won't get notified. So there's that. Anyway, and if you want to come join us afterward in Discord, the link's in the description. It's like $5 for 3 months. And hey, Michael. Hey, Ted. So, and if you're watching this later, maybe after the live stream's over, the chat's not active, leave a comment down below. I'll get back to you just as soon as I can. So, yeah, remember, that account you save may be your own. And don't trade garbage charts. There's garbage companies, and there's great companies, and then there's great charts, and then there's garbage charts. Don't trade garbage charts. And interesting statistic I found yesterday. The number one thing that traders like you can do to protect your trading account is to not watch TV. Specifically, the most detrimental thing that traders do is react to news. That is the number one most detrimental thing that people do that hurts their financial well-being, reacting to news. So, all right. Hey, Anthony. Welcome, everybody. Now, think about it. I'm not financial news, but those mainstream media people that are watching my stuff and taking notes, give me some credit. Anyway, moving on. We have the hazard. The Treasury is going to have to refinance about $1.2 trillion of money, put it back. The extraordinary measures plus the $500 billion slush fund they like to keep. And that's going to suck liquidity out of the market. Morning, Mad. Morning. All right. So all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Whatever I talk about may be full of crap. May not happen. This presentation here, informational, educational, and fun, is not a recommendation to buy or sell any financial instrument or anything else. Like, don't even buy the $5 thing if you don't want to. Talking with me may be worth it, maybe not be worth it. Just saying. And if you desire personal financial advice, you need to hire and consult a financial advisor who has a fiduciary duty to give you good advice based on your financial situation. Remember, never borrow money to trade with. Never risk money you cannot afford to lose. And on to what's happening. So this morning we had non-farm employment change. I had to refresh this, get some fresh numbers here. Coming in 278 yesterday. Big interesting thing that happened with that JOLTS jobs. Look at that, over 10 million. I was kind of expecting a drop. I mean, I was expecting that what the heck's going on here? Hold on a second. Got to stop something here. All right. So I was kind of expecting a drop, and we got a pop. That kind of put a little bit of damper on the market there. Outperformance, kind of like what we saw back here. Expected a drop and got a pop. I'm not so sure about this. I think it may be make-believe right there. Not sure where they're getting that number, because I don't know if it's fitting with they just got to keep with the narrative or what, because a lot of my clients are talking about laying people off, not how awesome and, need to hire, the true narrative on the street has changed from can't get people to work to can't find the work to put my people to work. So that gives me a little caution. Like I said, the GDI, gross domestic income, has been dropping for several quarters, and people with the interest rates rising at the same time, that's creating a situation where we can't afford things that, like new houses, the drivers of the economy are starting to shut down. And this may create, I think this was probably down here in the 8s, not up here in the 10. I don't know. I have a hard time with that one. I think that's make believe. Anyway, I don't know why they feel like they needed to make that up, but they did. So unemployment claims right here, coming in 232. I mean, that was in line, basically. Pretty much in line. Almost right on the dot. That was pretty good. Our economy churns 200,000 to 300,000 jobs in a normal. If we zoom back out, my little bar quits showing up here. If we zoom back out, and we churn. I mean, we're back at the resting. We're back at resting here. This was a big spike, and then this came back down, and we, somewhere around the end of 2022. I mean, the start of 2022, we were back to basically the economy's resting heart rate. Any of these, little spikes that they claim in unemployment, it's not really a thing. So we're back to normal. All right. And closing that one back up. We have ISM manufacturing PMI coming out at 10. That'll probably be a market mover. Probably get some reaction. And then we have FOMC member Harker speaking again at 1 p.m. That might be a mover. And then we have average hourly earnings and non-farm employment change and unemployment rate all coming out tomorrow morning before the bell. I'll talk about those tomorrow as we get those numbers. So that's economic news coming down, or economic numbers coming down the pipeline. What does it mean for the markets? I don't know. Looks like overnight we just kind of hung out sideways. I don't know what that deal with got a little bit of pop, a little bit of drop, but mostly just hanging out sideways. This is an inside candle so far, and not a lot happening here. If we kind of zoom in, look at where we've been. That was the move right there. We kind of dipped yesterday, did the retrace. That was kind of a 3-wave retrace deal. This can be the start of the next move here. So you're like, I don't see it, JT. What are you talking about? Well, look, we kind of did this. Retraced right here. This is just technical analysis right here. That's 1, 2, 3. We did a 4 right here. Then we did a 5 right here. And then we did a big 3-wave retrace right down into this low right here. That went 1, 2, 3, right like that. And now we have the next move up. This being the big move up right here, a big move down. First move up. This is like this little baby move right here. 1, 2. This is like the new 1, 2 right there for the next potential move higher. All right. Zooming this on out. And removing these lines, changing it back to like this, like that. 1, 2, 1, 2. So this is a sub move. So the 3 on this 1, 2 right here. Getting a little nerdy this morning. Sorry. if it's above your head, but target on this one be up here around 42.30. Somewhere right up in this zone for this move off that low. This thing will probably go and then pull back and then get the last little move right up to that level. Something like that. That's kind of what I see. I mean, bias for the day, maybe long, as long as we can hold over this low. We start breaking below this low, something else is cooking. So this low is highly important right now. This low right there, highly important. We start getting below that, the tides can turn down. So as long as we're holding up right here, and you may be like, JT, I'm totally lost. Totally lost. What the heck is ES? It's the S&P 500 futures. We're talking about SPY. If you knock a decimal off of here, SPX is the cash index. ES is the futures. If you've never used futures before, I mean, look, we got all this overnight data. If we pop over here and look at this right here, we quit trading last night and there's no data. Like, there's nothing this morning. No information. And we had a gap down, and this thing makes gaps all the time and misses, missing data. We don't have anything from this morning. That's why I use futures. All right. Now, interesting to note on the S5FI, we've made another push down into the 20s. 20s are the reversal point. So I'm very conflicted right now. I see AI as kind of a bubbly situation. But when I look at the S&P 500, we're sitting here in the 20s. That's a reversal place. Like, we usually shoot up to the top again. We don't have, this is kind of like an energy gauge. Like, when the energy is super high in the market, that gives us energy to go down. When we're down at the bottom and the energy is super low, that gives us a lot of built up energy to go higher in the markets. Now, we're kind of at the low energy state, looking for a big rally potential here. This is kind of interesting when I look at it. And then NDFI just parked in the middle. Like this, obviously big tech, the NASDAQ 100, still amuses me. It has 2 decimal places and there's 100 stocks. How the devil is? How do you get decimal points on 100? Anyway, this one not down here. And it's not up here. It's just parked in the middle. That's like indecision on big tech. The 6 or so names that have been driving this thing higher. The rest of it's just not participating. The other 94 stocks just kind of meh. I mean, partly above their 50-day moving average, partly not. I don't really use the 50-day for anything except this measure right here, just to see, this is kind of like the fuel gauge. Where are we at the fuel gauge? This NASDAQ right here is showing kind of a half a tank. S&P right here is showing an empty tank on going lower. All right, if the tank was full, we can go down. But the tank is empty, and up is the easier direction. Going down further, there's not enough energy. Like, if we were up here, like we were back here, there's a lot of energy to go lower. But right here, there is not a lot of energy to go lower right now. Everybody get that? It's kind of how I view this right here. So these things don't like to hang out at one extreme or the other. You can see we spend a little time here and then we go the other red bar. It's just the way this works. This thing's almost like an RSI or a oscillator. We tend to not hang out in the middle like the NASDAQ one is. We tend to oscillate between the top and the bottom. 20 is about the lows, 80 is about the highs. We're extreme if we're below 20 or above 80. So this is kind of my fuel gauge for the market. And we're sitting here just above 20 yesterday. We can see a strong reversal. All right. that conflicts with my view that NASDAQ is kind of topping out here a little bit. So we could do something that doesn't make sense. We could go higher in the face of what looks like we needed a pullback, although that's almost complete. And we can go on that next rip for NASDAQ, S&P 500. I kind of drew that in there. Maybe we get the bigger pullback. Maybe we just rip on out. I'm cautious all the way around. This is unclear pattern forward right here. So my bias for the day kind of sideways a little bit. And Russell continues to churn at the bottom right here, overlapping yesterday's price action, just not clear at all. I mean, we've been in this box on the bottom of Russell since March. The S&P made a bottom back here March 13th, and it shot up. Russell made a bottom here and just kind of made a couple lower lows here and just parked at the bottom. It hasn't. There's no money flowing in here. So this is one to keep an eye on. If we start getting money flow, break out over the roadmap line, we could go on a epic run here. Like this one can go right back up here into the 2000s. But if it starts breaking down below the lows, we can get some extensions down here, like 1670, 1630, possibly even all the way down to like 1600. It can extend down one more time. Why 1600? Well, look right there. Even 1570 possibly on that move. So be careful. That's the big thing. Like, there is nothing clear. There's no high probability junk going on right now. Oil, this one was the high probability junk. Right down into my target zone. Find a little bit of support. I'm going to try to close out my SCO position. And we've thoroughly tested this orange box here. This orange box holds. This is a bullish pattern. Right, this is super bullish. Now, the indication this is going super bullish, a break back and a hold above 70, not just like a spike up. You know, if we get a spike up and drop back out, probably going lower. But if we break up, hold above 70, that's my indication that we're going higher on CL right here. So put an alert right there. We start breaking that, time to go long. I'm talking long like USO, UCO, even leveraged oil stuff like that. This is one of the patterns I look for that is the most explosive pattern. You might be like thinking, but JT, how high are we talking about here on this next move? Well, we have to take it all in moderation here. This move popped up, retraced. This can set oil back up into the $80 to $84 area, possibly 82 right in the middle. So looking for that if it starts kicking above 70. All right, roadmap line down here. So we can see this thing pop back up in here. Where from there? Probably a retrace back to this line right in here, maybe the roadmap line, somewhere holding there, and then go higher again, maybe up into the $90 area. Stay tuned, we'll cover that. But right now, looking to get off my oil short. There is still risk to go on down here if this breaks on down, but right now, the high probability thing, since it held right here yesterday and today, I'm going to step out of the way and let this play on out. If we do get down here and then form a reversal, I'll be letting you know. So this is one of the things I am keenly watching right now. Like for a long time, I was like, oil's no good, oil's no good. Now is the time to start watching. And I'm not saying today is going to be the entry. Maybe take a month, maybe take a week. I don't know. All right, but soon this thing's going to set up. It's going to reverse either from here or possibly down here. And we're going to be looking for a move higher. GC. Come on, GC. Popping up a little bit higher than I like there. I'd feel really good if that made one more push down. Silver, SI1, exclamation point. Hasn't quite triggered my my entry. This is similar to what I'm looking for in oil right here. We kind of did this move right down into my support zone. Reversing here, can take this one on a mega run, breaking back above about 24, 15, 17, 20-ish on the futures. That's what I'm looking for. SLV, probably my play right now. Looking for that to get back above that high, right around 22, right there. So these are the ones I'm watching very closely. This one can go on a mega run, and we're talking 30s, like 35. This is long term. This is not like in June or July. This is like go out to 2025. All right. Buy some shares. Bitcoin here, back to the bottom of the box. If it holds the bottom of the box, we could get the energy to break out in the next couple days. Watching this one closely today, we start breaking above that high we made on Tuesday. What is today? Thursday? Back on Tuesday, we break above that high. It's on like Donkey Kong. All right. So that one's one. Another one I have my eye on. Ethereum holding up above its consolidation box. This is very bullish for Ethereum also. And then Litecoin, I had some alerts. Yeah, holding up at the top of the range here. This one potentially going to break out and go. This one has a halving event in August. And if you don't know what a halving event is, maybe you should listen to some other crypto stuff. Anyway, DXY. Yep, expecting that to roll back over, drop back below the roadmap line, and make an extension lower. That's what I expect on the dollar. And then, I need to refresh the list because Bud was yesterday's list and today's list. There we go. We have AI getting slammed. The first few are going to be off of StockTwits. Looks like the market opened. AI, came up right near the target. And what happens? It reverses hard. Classic. SDA, I would watch that one to reverse hard also. Things cannot go exponential without exponentially coming back, finding support, and then going. SoFi, looks like just parked at the resistance. Trouble breaking through. Nothing major there. We get through there, we could go extension out to $9, which that'd be pretty darn good. That's what, 20%, almost 30%. I ain't getting close to 40%. That'd be a pretty good move. So watch SoFi. We start breaking above 7. Pick up some shares. Pick up one share. Right up to 9. LCID. Remember, it's not advice. I'm just throwing that out there. LCID. Yeah, this is a garbage chart. Don't trade garbage charts. That's a garbage chart. Don't try to pick bottoms. NIO. Hey, morning, Pat. Morning, Mary. Morning, Francois. Morning, Valerie. NIO, another garbage chart. I don't know. Target, another garbage chart. That one's, unlike Bud, that one's not doing a retrace. That one's going lower. Bud potentially going to find support in this area and turn higher. I drew this on yesterday. Potentially finding support right there at the 618. This is like what I was talking about on oil, just on a bigger picture, bigger move. And this one can take this super high too. Remove that. This can be, click these in. We can be talking about Bud back up into the high 80s and 90s here on this next move. If it breaks above the roadmap line. If it stays below the roadmap line, we can extend lower down into the 30-40 area. All right. That's what I talk about. Be careful. Only buy when it proves it. Buying the trend, all that cheesy stuff. Trend is your friend, blah, blah, blah. I don't usually say that, but buy in trend. Don't try to counter trade. Don't buy the knife. Knife dropping, cuts your hand, sometimes a limb, sometimes a leg. Goose can talk about that more than, I learned that lesson long, long ago. Don't try to pick bottoms. Wait till it does a bottom and then comes back in trend. Now this setup right here is one I watch. Is a move up, a 618 retrace. We pop back above aggressively. You could get in at 56, but I would wait till that move above the roadmap line because it can run out of steam and roll on down. Be careful. Target though, not doing that kind of pattern at all. Look, I mean, this is lowest low right here. You know, this thing can come all the way back down. We have support like at 100 on target from back in COVID. Be careful. CRM. Yeah, that one on a breakout. The pattern plays out somewhere around 230 that I had this target pattern thing extension. And yeah, that was kind of a slam back down, but holding above the support. I mean, that can go on up. Now, if it starts breaking below about this $200 area, may come back down near the lows. Be careful. Macy's, ouch. Retail is a story of haves and have-nots. If you're performing, you're a have. If you're not performing, you're a have-not. Looks like Macy's is not performing very well. That one can come all the way back down into the $6 area down here. Crowd. Ouch, right back down to the bottom of the box. Expect the box to stay in play. Find support probably down around 140 and then go for another attempt to break out. Maybe come down to the roadmap line at 135. Be careful. If we get below the roadmap line, this one can go lower. OKTA getting slammed. Lots of these getting slammed today. Just a slamming kind of day, I guess. Lots more stuff going down than was going up. So everything kind of recharging. And that one's right back to the bottom of the box. Look at that. Pull the box over. That's the gap. We filled the gap and retrace. Could come back to this gap down here. Vive. That's probably going to retrace. That's at least go back to the roadmap line. Chewy. Popped up to the roadmap line. Watch for the reaction. That can find resistance. I would not expect continuation at this point. We get up here, stay up here for a day or two, then we can go on a run. But this, I think that was the lowest low, wasn't it? It's the lowest low of what I see. Oh, we're holding a higher low over here. That was a three-wave move up. Three waves are corrective. If this, that's below this over here, so this can go lower. Definitely need this to get back above the roadmap line. If this holds the roadmap line and turns down, breaks below this low, we're going extension lower. And for Chewy, that means something around 14. High probability pattern going up. There isn't one right now. Nothing high probability about that. That's we're either stuck in this consolidation. And those are lower highs. Or we're going lower here. SMAR, Smart Sheet. Never heard of this. Package software. Looks like 51 is going to be the upside resistance here. Working toward it. QSG, that looks like hot garbage right there. Dumpster fire emoji. UCAR, garbage. AYX, garbage chart. I need like a little button I can just push and throw up a flaming dumpster. That'd be great. PSTG. Interesting. It's just stuck in a range though. Man, look. We're just stuck. Just chopping for years. It's not a breakout until it's above 37, 38. Otherwise, we're just chopping in this chop. Rio looks like a garbage chart. Probably needs a lower low. It can hold there, but it looks like it needs a lower low. That's the danger zone right there. We're in this reversal zone. We get below it. Probably going down here. PSX. That'd be a great place to hold support and turn higher. Got to be above the roadmap line at 100, right up in here. Oop, click the right button. Got to get above that to go higher. Otherwise, we can make an extension down to $87 area. DG. Ouch. It looks like the return to lows from back here. Got the COVID lows all the way down here. Click on the right stuff. It may come back to the COVID low. It's not a long way to go. Ouch. This is the one thing that's not indicating a recession. Like, dollar stores tend to excel. Like, this is what makes me think we had the recession. Now we're wrapping it up. ESLT, Elbit system. Just choppy garbage here. Not breaking up through the resistance. Same sort of thing. And then ADBE. And probably going to come up and test this at 1450. I mean 450. 450. Its August high is right there. So this one's underperforming. It's almost caught back up, but it's been underperforming. Yeah. What are you talking about? I'm talking about, like, look at QQQ. You know, NASDAQ. Instead of going back to the futures, look, QQQ is above the August high. All right. So Adobe is one of the underperformers. You know, Amazon's the big dog underperformer right here. Still got like a 25% gain just to get back to the August high. Let alone catching up here, like QQQ making the extension. You know, 164 would put Amazon back in the game. So huge opportunity there. All right, buys for the day. That's the end of the morning movers, you know, pre-market movers list. It took me a little longer to get through it because of my blabbing. And just kind of more sideways garbage until we get debt ceiling resolved. If Senate passes, we'll probably see some sort of crazy pop and then a drop. And then the drop's probably going to be scary and epic and dangerous. Please keep it in mind what's likely to happen here. When the market realizes that the Treasury is going to suck a bunch of liquidity. We're talking about, right now we're sitting on about a 3%, despite whatever Fed QT bullcrap they've been doing. We're sitting about a 3% positive liquidity for the year with all the measures that have been hitting the market. FDIC, blah, 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 all that, you know, whatever. But we can get a swing down to negative 10% of Fed liquidity when the Treasury starts sucking the money out of the market. That's like a 13% real money swing. That's a lot of money sucking, you know, that's 13% of our GDP sucking out of the markets. That can cause a gut-wrenching pullback if that kind of liquidity comes out of the stock market and needs to flow into other things. So keep that in mind. We could see a massive pullback. And it'd be like, yikes. I mean, you know, we're talking potentially as low as like 3,700 down here right now. And if we went for extensions, we could get close to retesting the lows if it got a little overexcited. Now, like I said though, the S5FI right now not showing we're going lower. So the path higher is, you know, a pop is more likely right now. And that could be a fast like 3-4 days to the top. It'd be a wicked rally and then a wicked right back down. All right, please be careful. Volatility is most likely coming. And I don't know that the VIX is going to pay properly. But we're going to see some realized volatility expansion in the market. All right, it's probably coming. Maybe not today, maybe not tomorrow, but soon. And for the, maybe for the duration of the summer. All right. Please be careful. Keep coming back. I'll do this again tomorrow. So make sure you're subscribed. Make sure you hit the bell with the notifications for the best chance that you get notified when I go live. And if you want to come chat in Discord, hit the link in the description. If you're tuning in later today or sometime else, leave me a comment. And I'll see you tomorrow.